Good morning, Europe, and to our viewers in the Americas, a very early good morning indeed, as the US markets remain closed today. But make no mistake, the financial world never sleeps. We're seeing active movements across global futures and overnight trading, setting the stage for what promises to be a pivotal week. Right now, the sentiment across the major US equity futures contracts is one of hesitation. The S&P 500 futures are signaling a modest pullback as we head into your morning. The tech-heavy Nasdaq futures, however, are showing a more pronounced dip, suggesting a cautious start for growth names when markets eventually open. Even the Russell futures, representing those smaller cap companies, are reflecting this underlying tremor. It's a broad-based softening, hinting at investors reassessing positions after recent macro data and, critically, a major development in Washington. Adding to this sense of unease, the VIX futures, our gauge of market fear, are displaying a noticeable uptick. This tells us that options traders are pricing in an increased level of volatility in the days ahead. We're navigating a complex landscape, balancing the persistent questions around inflation with the seismic shift at the Federal Reserve. And speaking of seismic shifts, let's talk about the undisputed headline dominating financial discourse. Kevin Warsh is the new Federal Reserve Chairman. This is not just a change of guard, it's a fundamental recalibration of the Fed's trajectory. Warsh, with his deep ties to Wall Street, represents a different philosophical approach. His nomination, as prominent voices are highlighting, solidifies Wall Street's grip on the Federal Reserve. What does this mean? Expect a potential lean towards a more market-centric monetary policy, perhaps with a more hawkish bent on inflation control. This appointment will be meticulously scrutinized by every investor on the planet. Beyond Warsh, other influential figures are weighing in. We heard Michael Saylor, a relentless advocate, championing Bitcoin's ability to transmit value globally, minutes, anywhere, for pennies, even on a bank holiday. A powerful statement about the disruptive potential of digital assets, especially when traditional systems slow down. Meanwhile, Elon Musk continues to push the boundaries of innovation, proclaiming Tesla will command the largest fleet of autonomous vehicles as far into the future as he can possibly imagine. This isn't just a vision. It's a direct challenge to the automotive establishment and a testament to the accelerating pace of technological advancement. On the other side of the ledger, we're seeing intriguing developments surrounding other key players. Christine Lagarde faces an emerging political shadow in Europe, potentially impacting future ECB leadership. And the financial titan Jamie Dimon, CEO of JP Morgan, has confirmed that the offer of the Fed chair was not extended to him, further emphasizing the specific direction the Trump administration has taken with Warsh. Even Jensen Huang, the visionary behind Nvidia, made headlines for ditching a major AI summit in India, sparking discussions about the strategic focus and priorities of the AI powerhouse. These aren't isolated anecdotes. They are pieces of a much larger puzzle, reflecting the evolving power dynamics and strategic shifts across the global economy. Let's turn our attention to the bedrock of the financial system, the bond market. And here, the fresh macroeconomic data from the US is absolutely paramount. We just saw US inflation, as measured by the Consumer Price Index, slow to 2.4% in January. This is a critical data point that offers a glimmer of hope on the inflation front. For the bond market, a slowing inflation rate typically implies less pressure on the Federal Reserve to aggressively hike interest rates, or even opens the door for future rate cuts. However, this data arrives in a completely new context, under the leadership of Chairman Kevin Warsh. How he interprets this slower inflation, and how it aligns with his personal philosophy on monetary policy, will be decisive. Will he view it as confirmation that the Fed's prior actions were effective, or will he maintain a vigilant stance, emphasizing that the fight against inflation isn't over until it's firmly within target? The market will be pricing in every nuance of his potential approach. The "how does the Fed actually change interest rates?" discussion becomes particularly relevant now, as we contemplate the mechanisms Warsh might employ to steer the economy. Bond yields will be highly sensitive to any pronouncements or perceived shifts in the Fed's forward guidance under its new leadership. It's a delicate balance, where every word, every data point, takes on heightened significance. The central bank landscape is undergoing significant shifts, and the Federal Reserve, now under Kevin Warsh, is squarely at the center of the storm. This appointment is arguably the most impactful financial news in recent memory. Warsh's known inclinations suggest a Fed that might be more proactive in its inflation fight, potentially even revisiting the notion of higher for longer rates if he believes the job isn't done. His background, as we've discussed, implies a strong understanding of market mechanisms, which could lead to policies designed to instill market confidence but also potentially less tolerance for inflationary pressures. We'll be watching for any early signals, any subtle shifts in language that betray his strategic intent. The very mechanism through which the Fed influences interest rates, from open market operations to forward guidance, will now be filtered through the lens of Warsh's leadership. Across the Atlantic, the European Central Bank is also facing its own unique challenges. Christine Lagarde is navigating a complex political environment, with a shadow of potential political shifts impacting succession discussions. This internal and external pressure could influence the ECB's policy decisions, particularly as it grapples with its own inflation data and the ambition for a global euro. Any perceived instability at the top could inject unwanted uncertainty into Eurozone markets. And in the United Kingdom, the anticipation is building for January's UK inflation data. This will be a critical report for the Bank of England, as it assesses the effectiveness of its own monetary tightening. Will it mirror the US slowdown, or will it present a more persistent inflationary picture? The divergence or convergence of global inflation trends will be a key determinant for all central bank strategies moving forward. This is a truly global dance of monetary policy, with each central bank's moves impacting the others. Let's shift our gaze to the raw materials that fuel the global economy, and here we see some divergent trends in overnight trading. Crude oil futures are seeing a notable uptick this morning. Despite earlier reports of oil drifting lower ahead of US-Iran talks, the market seems to be reacting to a different set of catalysts or perhaps recalibrating expectations. Geopolitical tensions, even under negotiation, often keep a floor under oil prices, and any perceived shift in supply or demand dynamics can send futures higher. This bounce suggests traders are factoring in continued global energy demand or perhaps some supply tightness that wasn't fully anticipated. However, the star performer in the energy complex this morning is undoubtedly natural gas. Futures for natural gas are experiencing a significant surge. This robust move comes against a backdrop of ongoing concerns about energy costs, particularly highlighted by reports from regions like Maine, where natural gas prices are a major driver of energy bills. This emphasizes the localized yet interconnected nature of commodity markets. Winter demand, supply chain issues, or even geopolitical factors can all contribute to these sharp price movements, impacting households and industries alike. In contrast, gold futures are showing a pullback this morning. This softening in the yellow metal often coincides with a slightly stronger dollar or a perception of reduced risk in the broader market, even if only temporary. The fact that China is closed for Lunar New Year could also be playing a role, removing a major source of physical demand and potentially dampening trading volume, allowing for more pronounced overnight moves. Silver futures are generally following gold's lead, experiencing a similar, albeit proportional, easing. These movements across the commodity complex provide crucial insights into investor sentiment regarding inflation, global demand, and geopolitical stability. Now, let's drill down into specific sectors, where we see a fascinating interplay of resilience and caution in these overnight futures movements. The tech megacaps, often the market's bellwethers, are presenting a mixed picture. While Nasdaq futures show a broader softening, several individual giants are demonstrating remarkable strength or stability. Nvidia, for instance, is holding remarkably steady despite the broader tech pullback in futures. Visual, animated chart for NVDA, showing relative strength, flat movement while Nasdaq is down. This resilience underscores the market's unwavering conviction in the AI revolution. Even with discussions around AI disruption fears, from general headlines, the actual investment flow into enablers like Nvidia remains robust. This signals that investors are distinguishing between the broader fear of disruption and the tangible opportunities presented by the technology itself. Jensen Huang's strategic choices, even his absence from certain summits, are likely viewed through the lens of maintaining this laser focus on AI dominance. Meanwhile, Apple, Microsoft, Meta, and Google are all showing either slight gains or are holding firm in futures trading. This is notable when the broader Nasdaq futures are down. It suggests that these entrenched titans, with their diverse revenue streams and strong balance sheets, are perceived as safer havens in times of uncertainty. Their scale and market position offer a degree of insulation. Amazon, on the other hand, is exhibiting a slight softness, indicating that some segments of the e-commerce and cloud computing giant might be facing slightly more pressure. Then we have Tesla, which is holding flat in futures. Elon Musk's ambitious pronouncements about leading the autonomous vehicle race continue to shape its narrative, but the stock itself seems to be in a holding pattern, perhaps awaiting further catalysts or clearer market direction. Finally, in the realm of Bitcoin-related equities, MicroStrategy futures are experiencing a slight dip. Visual, animated chart for MSTR, showing slight downward movement. This comes amidst headlines suggesting the company is preparing for a Bitcoin price drop. This creates an intriguing tension with Michael Saylor's continued bullish evangelism for Bitcoin. It highlights the inherent volatility and the divided opinions surrounding digital assets, even among their strongest proponents. The market is clearly weighing the optimism of Saylor against the prudence of risk management. The AI theme continues to be a dominant undercurrent, with major investors like Bill Ackman, Ray Dalio, and Michael Burry making significant plays in this space, indicating a long-term conviction that transcends daily fluctuations. The digital asset space continues its relentless march, though not without its characteristic volatility. This morning, Bitcoin futures are reflecting a pullback. After a period of significant upward momentum, the leading cryptocurrency is experiencing some profit-taking or a broader reassessment by traders. This reminds us that while the long-term thesis for Bitcoin may be robust, its path is rarely a straight line. Adding to the dynamic narrative in this space, we heard Michael Saylor, a titan of the Bitcoin world, once again underscore the fundamental power of the network. His assertion that Bitcoin can send any amount of money, anywhere on Earth, in minutes, for negligible fees, even on a bank holiday, is a powerful endorsement of its efficiency and decentralized nature. This is a direct challenge to the traditional financial infrastructure, highlighting a future where instantaneous, borderless transactions are the norm. However, the plot thickens when we look at companies with significant Bitcoin exposure. MicroStrategy futures, whose fortunes are so closely tied to Bitcoin's performance, are showing a softer tone. This movement is particularly interesting in light of recent reports indicating that MicroStrategy is preparing for a Bitcoin price drop. This suggests a layer of strategic foresight and risk management within the company, acknowledging the inherent cyclicality and unpredictability of the crypto market. It creates a fascinating juxtaposition: unwavering long-term conviction in Bitcoin's utility, paired with a pragmatic approach to managing short-term price fluctuations. This duality is a hallmark of intelligent navigation in the crypto landscape, where both vision and prudence are paramount. As we look towards the rest of the day, particularly for our US audience, remember that the US market remains closed. This means our focus continues to be squarely on futures momentum and the overseas reaction to the profound developments of the past 24 hours. European and Asian markets will be digesting the US inflation data, and more importantly, they will be intricately analyzing every implication of Kevin Warsh's appointment as Federal Reserve Chairman. His shift to the helm is not just a domestic US story, it's a global event that will reverberate through every major economy. For investors globally, the key is to monitor how these futures contracts stabilize or continue their trajectory throughout the European and Asian trading sessions. Any significant shifts could indicate a deeper sentiment change. Looking further ahead, critical data points like the upcoming UK CPI data will provide more pieces to the global inflation puzzle. The market's continued digestion of Warsh's policy leanings, coupled with ongoing geopolitical developments impacting oil, and the relentless evolution of the AI sector, will be the dominant themes. This is a time for strategic positioning and careful observation, rather than chasing ephemeral intraday swings. The foundations for the next market cycle are being laid right now. So, as we conclude, the financial landscape is undeniably in a state of flux. We're witnessing a market grappling with new leadership at the most powerful central bank in the world, shifting inflation dynamics that could redefine monetary policy, and persistent geopolitical pressures that keep commodity markets on edge. The tech sector, despite some broad softness, shows remarkable resilience in its foundational AI players, highlighting where the true conviction lies. And the crypto space continues its dance of innovation and volatility. My final take for today is this: the appointment of Kevin Warsh marks a defining moment. It injects a new dimension of uncertainty, but also potentially clarity, into the Fed's future path. Investors must remain prudent and vigilant, understanding that every piece of data, every central bank pronouncement, and every geopolitical headline will now be filtered through this new lens. This is not a time for complacency, but for profound analysis and strategic foresight. The financial chessboard has just seen a major move, and the game is only just beginning.